Hello and welcome to this TaxCalc video, where we'll see how to declare foreign land and property income on an individual tax return. First, let's open an SA100 tax return. We'll navigate to the Foreign Income section, which can be found under Other Income, Foreign Income. On this page, you'll need to select the types of foreign income relevant to your return. For this demonstration, all of the boxes are pre-selected. Click on Foreign Land and Property in the left-hand menu. Within this section, we need to declare all foreign land and property that is taxable in the UK. As per the notes on screen, if you have any income from furnished holiday accommodation in the EEA, you'll need to fill out the UK property pages. Please refer to our other videos on property income for further guidance on this section. If this is not a furnished holiday accommodation, click Next Step. The first page requests details for the property. If the income is unremittable, tick this box. If not, leave it blank. You'll need to enter the 3-character country code, which can be manually typed in if you know it, or selected by clicking on the icon here. A pop-up window appears where you can scroll to locate the country or search for the country here. The address fields are optional and do not form a part of the return. If you prefer to leave this blank, you can, but it may benefit you to distinguish between properties if you are entering multiple sources of property income. This information will only appear on the Foreign Land and Property Summary generated within the TaxCalc summaries. Next, we need to declare the amount of rental income received and foreign tax paid on this property, along with any UK tax taken off. If you are claiming property allowance, enter the figure in the next box. In this example, we'll leave this blank. Note that if you choose to claim property allowance, you cannot deduct any further expenses or allowances in relation to this property. Any premiums paid for a grant of a lease need to be entered here. As we are claiming tax credit relief, we'll tick the box. If you have used traditional accounting instead of the cash basis, you'll need to tick this box. In the return, we're using cash basis and we'll leave this blank. If there are any unused residential finance costs that have been brought forward from previous years, enter the figure in this box. If you choose to claim the property allowance, this section of the video will not apply to your return. If there are any allowable property expenses and you want to offset them against income from the property, you'll need to complete this section. HMRC only requires a total of the expenses, but you can click on the wizard if you wish to submit a breakdown. As residential finance charges and interest are now restricted, you'll need to use the wizard to declare if you are claiming these. Then we come to adjustments and reliefs related to this property. Any tax adjustments to expenses related to private use, balancing charges, capital allowances for equipment and vehicles, zero emissions goods vehicles allowance, and any costs of replacing domestic items will need to be declared here as shown. If there is any further foreign land and property, click here. Alternatively, click Next Step. In Foreign Property Losses, the boxes highlighted in yellow are automatically populated from previous sections. The adjusted profit or loss is calculated automatically from entries on the previous pages. The next box is for you to enter any unused foreign property losses that have been brought forward from earlier years. This will automatically be offset against the profits in the year as shown on screen. This will then provide you with any losses to carry forward if this is applicable. In each instance where FTCR is claimed, you'll receive an FTCR worksheet within the Summaries section of TaxCalc. This summary worksheet takes the foreign income entered and calculates the amount of UK tax due. The UK tax due is shown in box TC144. TC145 then shows the foreign tax paid. The lower of these two boxes is then input into box TC146 and is included in the total claimable FTCR on the return. If you believe this calculation is wrong, you have the option to override the total allowable FTCR on the return. To do this, you'll need to go back to the data entry section of the return and locate the foreign income section again. On this page, we can see the overall claim for all entries contained within the return. To override the value, tick the box and amend accordingly. That concludes this video for foreign land and property income. Thank you for watching.